Bitcoin hitting $1 million? Experts are divided. From institutional adoption and ETF mania to historical patterns and on-chain data, we're unpacking all the latest price predictions, and you won't want to miss this. In the latest video from Altcoin Daily, Charlie Kirk says the world's wealthiest families are investing heavily in Bitcoin. Hugh Henry predicts Bitcoin will reach $1 million, surpassing gold's market cap. While Bitcoin ETF investments are surging, analyst Tom Lee explains this doesn't necessarily reflect new Bitcoin purchases, as some investors are simply transferring existing holdings. He also points out that many long-term Bitcoin holders are now willing to sell around the $100,000 mark, creating price resistance. Despite this, the video emphasizes Bitcoin's scarcity and predicts a major bull run in 2025 to 2026. I find it interesting how Bitcoin's price action can be so disconnected from the underlying sentiment. While institutional interest seems high, Tom Lee's analysis about existing holders selling and the in-kind ETF transfers sheds light on why the price hasn't exploded yet. It reinforces the idea that Bitcoin's price isn't just about adoption, but also about the interplay between long-term holders and new investors. The prediction of $1 million Bitcoin is bold, and it will be fascinating to see how these factors play out in the coming years. In the latest video from Crypto Rover, Bitcoin's price action mirrors a historical bull flag pattern, suggesting a potential surge to $135,000 to $140,000. This prediction is supported by on-chain data showing accumulation by new wallets and low Bitcoin reserves on OTC desks. The video also points out a correlation between Bitcoin's price and the M2 money supply, which recently hit an all-time high. Shifting to Ethereum, the analyst predicts a similar price surge, potentially reaching $3,000 and then $4,000, driven by factors like large accumulation and interest from institutional players like Tom Lee, who aims to create an Ethereum MicroStrategy. The video highlights ongoing Ethereum ETF inflows contrasting with Bitcoin ETF outflows. While the historical patterns and on-chain data presented are interesting, relying solely on technical analysis for price predictions can be risky. The cryptocurrency market is influenced by many factors beyond historical trends, including regulatory changes, macroeconomic conditions, and overall market sentiment. The comparison to the M2 money supply is also a complex relationship and doesn't guarantee a direct correlation with Bitcoin's price. Tom Lee's interest in creating a large Ethereum reserve is certainly noteworthy, but his plans alone can't dictate market direction. It's important to consider these additional factors and exercise caution when interpreting predictions. In the latest video from Lark Davis, he discusses the paradoxical state of the crypto market, seemingly unaffected by positive news like ETFs and institutional adoption. He touches upon recent market dips, attributing them to external factors like Japan's refusal of American rice and weak U.S. job numbers. Despite this, Lark remains bullish on Bitcoin, highlighting the $109,000 resistance level as crucial for a potential surge to $120,000. He also notes the significant increase in corporate Bitcoin purchases, surpassing ETF buys in recent quarters. Good news for altcoins, as Grayscale's digital large-cap fund ETF, including Solana, XRP, and Cardano, is potentially getting approved, paving the way for other altcoin ETFs. Lark suggests that most top 50 coins might soon have their own ETFs. He also covers Solana's growth, Pango Coin's potential, and mentions BitDigital raising $163 million for an Ethereum treasury, the third such company recently. He suggests that the Standard Chartered Bank predicts Bitcoin could reach $35,000 in Q3 and $200,000 by year-end. While the market volatility discussed by Lark is to be expected in the crypto space, the increasing institutional interest, particularly in Bitcoin and now expanding into altcoins via ETFs, appears to be a strong underlying bullish signal. The correlation with traditional market fluctuations, like job reports and international trade, is interesting and maybe temporary. This reminds me of recent news about BlackRock's Bitcoin ETF application possibly signaling a broader shift towards crypto acceptance within traditional finance, further reinforcing the long-term positive outlook. In the latest video from Coin Bureau, Nick discusses the unusual nature of the current crypto bull run. Unlike previous cycles driven by retail investors, this one is characterized by institutional demand through Bitcoin ETFs and corporate treasuries holding a significant portion of the Bitcoin supply. This has led to lower volatility in a Bitcoin-centric market. The video also explores the impact of regulatory changes, meme coin mania, and the shift in retail speculation. Nick discusses price predictions reaching as high as $200,000 for Bitcoin and a potential $5 trillion total crypto market cap. He emphasizes the importance of Bitcoin as a portfolio anchor and suggests considering real-world asset tokenization projects for diversification. It's interesting to see how institutional involvement is reshaping the crypto landscape. A recent Bloomberg article highlighted how BlackRock's Bitcoin ETF filing has further fueled institutional interest. This aligns with Coin Bureau's analysis of a Bitcoin-centric market driven by large players. While the $200,000 price prediction is optimistic, the growing institutional adoption does suggest a potential for significant price appreciation in the long term. This institutional adoption could also lead to more regulatory clarity, which could further stabilize the market and attract more traditional investors. In the latest video from Crypto's Russ, the host talks about three main things. First, he discusses the big, beautiful bill passed by the Senate and its controversies, such as increased spending, tax breaks for the wealthy, and its impact on border control and ICE. He also mentions the bill's potential effects on the deficit, estimated to increase by $4 trillion, and its implications for various industries like solar, wind, and automotive. Second, he chats about how Federal Reserve Chair Jerome Powell responded to criticism from President Trump, attributing his hesitation to cut interest rates to the ongoing trade war and tariffs. Lastly, he touches upon Grayscale's recent multi-crypto ETF approval by the SEC, which includes Bitcoin, Ethereum, Solana, XRP, and Cardano. He believes this signals potential approval for individual crypto ETFs soon. He briefly mentions Bitcoin's current price dip, suggesting it's temporary and remains optimistic about its long-term growth due to scarcity and increasing demand. This video provides a decent summary of current events impacting the crypto market. While the host's optimism about Bitcoin's future is common among crypto enthusiasts, the $4 trillion deficit increase mentioned raises concerns. Increased government borrowing and potential inflation could impact all markets, including crypto. Grayscale's ETF approval is definitely positive news, but its ultimate impact on individual crypto prices remains to be seen. The interplay between global politics, economics, and crypto is complex, so things could play out in many different ways.